best faculties of our institution, the person who motivates all of us. I don't want to introduce him because everybody knows him, Professor UC sir. So I specifically requested him because by seeing him only we get substantially motivated. So he is going to give some motivational talk, maybe around 6 to 8 minutes. Okay. So take that motivation for the next entire group which is pending. Over to you, sir.
Thank you. Thank you, sir. Right. Yes. Good evening, friends.
Good evening, sir. It's audible?
Okay. Yes. You're all preparing for the coming examination, are already partly over. Second group is pending, I think. Fine. 2-3 points I would like to make it before you take the second group. I start with a simple quotation. A dream does not become reality through magic. It takes sweat, determination, and hard work. Always remember, hard work increases the probability of serendipity. I just repeat it. Always, hard work increases the probability of serendipity. While most are dreaming of success, winners wake up and work hard to achieve it. They are CA people. Because there's no magic in CA. It's only hard work. Last so many months you have put hard work, and now the testing time. Every day you are having breakfast, like that examination also. It is just one more. I don't know how many examinations you have written already. This is one more. So no need to worry about the examination. Just your hard work is going to result in success. 100% it is going to result in success. Two things I would like to make clear. One is, you are capable. Otherwise, you would not have come to this level. But now this is the time you have to unlock your potential. That last minute killing instinct is required that you are having. So that's why I repeat it. You have to unlock your potential. Channelize your energy. A few days, you have to put that extra energy. Tell yourself, you can and you will succeed. Tell yourself again, you are well prepared, you can do it. And I would like to actually add a point. How the hard work, unlocking the potential is concerned. All you are familiar with the Hanuman story. Lord Hanuman, when he was in the war, suddenly you must be knowing that Lakshman was hurt by an arrow and he was almost, unconscious. So somebody told actually, go and get Sanjeevani from Himalaya so that he will be cured. And most of us actually, we are all actually one or the other way, Lord Hanuman we worship. You have seen the photo of Lord Hanuman carrying the Sanjeevani mountain. But the story is very small. I don't want to take much time actually. See, when Hanuman went, flight to Himalayas to get that Sanjeevani Parvat or Sanjeevani medicine, he saw that entire area full of medicines only. Which one to pick up? He was not a doctor. Which one to carry? So suddenly he was worried actually. It was a problem. What to do? Then he decided, okay, this is the problem. So he took the entire mountain and he brought it. And whichever actually the medicine required, the doctors used it. And he has taken it back and kept it there only. See, there are two things we have to learn from that. One is there was a problem for Hanuman. The problem was so big, he was unable to identify the medicine. And he started growing. He had that capacity. He had that potential. He unlocked his potential. Remember, he became so big, actually, the problem became small. I think you got the message. Your examination is not a problem, but you have to grow big. That's what I mentioned. Unlock your potential. Channelize your energy. You are capable, like Hanuman. And second point is actually his ethics. Actually, he took it back and kept it there only because let it be useful to others also. Same thing. You do your CA, become useful to society, then see the result. One is the satisfaction you get, and more than that, actually, more than the self-satisfaction, etc., we become the true servants of the nation. And today, and that's what I again quote. So you have to unlock your potential and you have to channelize your energy. Tell yourself you are well prepared and you can do it. You will 100% achieve success. Don't worry about the result. I would like to wind up with only one simple Sanskrit version everybody knows. And that is always I consider it is part of my life. Karmanne vadikaraste mafaleshu kadachana. Do your duty, unmindful of the results. Results will 100% come. I wish all my students all the best and 100% you are going to achieve it. You can do it once again. I'm going to repeat it. Thank you very much. All the best.
Thank you. Thank you very much for your nice words, sir. Thank you for the inspiration.
Thanks,
I'm sure it would have been substantial inspiration for all our students. Thank you, because you are the one person whom we all know. You preach only what you practice. And I know you for more than 2 decades. I know word by word what actually you preach is only based on the practice only. Thank you very much, sir. Thanks on behalf of the entire family. I'm sure students are inspired. Thank you, sir.
Once again, I wish them all the best. Okay.
Thank
Right.
you. Yes,
Okay.
sir. I'll continue, sir.
Okay, sir.
Thank you. Thank you very much, sir. Thanks a lot.
Yeah, sir. Right.
Good evening, friends. You're able to see the screen? You're able to see the screen? Yeah, fair enough. So, as you, sir, gave brilliant inspirational words. Motivation is like a bath. We need to take it daily. That's why every session we are coming and motivating you. And every time I reiterate this point. You're written for exam, maybe some of you are tired, exhausted, or some of you writing for the first time, the second group, or maybe some of you have finished first group earlier. All this, all said and done. What is your past? Not relevant. What is your history? Not relevant. We are going to make history by passing this examination, this attempt, come what may. Rama, everybody knows he was in Vanavas for 14 years. So everybody talks only about 14 years. But as per one version, I understand he lived for 10,000 years. One version says 4,010. And he was happily living Rama Rajya, what we call it as. So 14 years was nothing in that 10,000 years. Same way, okay, Krishna, even though we call him as a god, or Jesus Christ, they all actually born as avatar. They all struggled. So our struggle is nothing, just by preparing for the examination. If you think the preparation for the exam itself is struggle, please understand God themselves or avatars of gods also have not been spared from struggling. So let us enjoy the struggle. Let us enjoy the struggle. So with this, let me move on. So the today's session is going to be advanced accounting. So you already half done. So only another half left out. Mathematically, it is only 50% done. If you ask me, you're almost 60% complete, because first 4 days, especially this corona season, lot of tension, etc. First examination of your life, technically for some of you, and you're already past that stage. That means now you're just extend it. Very, very important. Okay, so now some of you say, oh, you another 4 exam likhna hai. At least the moment that idea comes, think. So when you're, how long I have to hold, you just think about a sentence. Why were you holding all this time? So till this date. So things are going to be beautiful for all of us. So one of the beautiful quotation, just to start with a fresh group: keep the smile, leave the tension, feel the joy, forget the worry, hold the peace, leave the pain, and always be happy. Mast majja madi. And some of you would have thought, let me write second group next, etc. Don't have that idea. Never give up. Just go and enjoy the examination. So today's session, again, since Sir spoke around 5 to 6 minutes, it may be instead of 30 minutes, maybe around 35 minutes. Okay. First 8 minutes will be generic. Next 17 minutes, I'll be talking specific. Then 3 minutes, last 3 minutes, generic, high by. No subject specific questions. We reiterate in every session. Already experienced group 1 accounts. When we were writing, or before this IPCC was introduced, accounts was only one paper at intermediate. So now the same thing has been divided into 2 with little less syllabus now. You already know what do you call, how to write accounts, you have experience. Now, wise men learn from others' mistake, fools learn from own mistake. Now, let us not get into that sentence. If you have done some mistake, wise men or fools, let us not bother. Let us learn from that mistake and improve upon in second group accounts. You have got a golden opportunity to maximize the mark. Approach and pattern is absolutely same. Be more relaxed since it is not your first examination. First impression, the best impression. Start with the easy and known. So syllabus mainly consists of accounting standards. There are 12 accounting standards: amalgamation of companies, partnership accounts, internal reconstruction, buyback, ESOP, banking, consolidated finance statement for a new scheme. Old scheme people reasonably same. I think CFS etc. may not be there. Maintain good pace. Very, very important again. We maintain the pace. Accounts is a high scoring paper, especially group 2. It is definitely high scoring. When I did a research about last 10 top rank holders marks, so they all scored second group accounts high mark compared to the first group. So even if you're not done well, don't bother. Even in first group, you may end up getting 160 out of 400. Here, if you get one paper 80, other papers somewhere on 50s, 240 if you get 160 plus 240, you clear both the groups. So that's what the target now. Whatever you missed there, don't bother. You have to maximize. Aim at 250, 240, 300, 400, which is a idealistic scenario. 100 out of 129, you must get it, you shall get it. Read question carefully and answer accordingly. Working notes are very, very important. Stepwise approach is very, very crucial. Final answer is also important, but in accounts, I'm again coming back, unlike costing. So even the steps carry substantial marks. As I reiterated earlier also, final answer tallied, but no workings, you may get only 50 marks. Final answer tallied only for 1 or 2 questions, but working notes, accounting standard reference, etc. perfectly done, you may get a 90 plus. So core subject of our course, chartered accountant. So enjoy the examination. CA intermediate, I'm talking about the new scheme. Syllabus, there is substantial reduction. Even in the old scheme also, they reduced it. So the topics removed under intermediate, I'm talking about intermediate syllabus, not IPCC. IPCC also similar notification would have come. So mutual fund is not there for this examination. Goodwill, underwriting, insurance company file account. These topics have been removed. However, entire partnership account, which was there in group 1 earlier, and AS4 standards have been shifted here from group 1 to group 2. This is one of the indications that group 2 accounts was reasonably lesser, now also continue to be. Old scheme, very important. Old scheme people who are listening to me, like some topics like department branch, just see if it is still in second group account. We have already done group 1 similar, what you call the session. It is available in the YouTube. You can go through it for those portions only and maximize your marks. Fine. Do's and don'ts. Every examination, 1:45 it starts. Be there in the exam hall. Okay, at least by 1:15 or 1:30. So 1:45 when the examination question paper is given, visualize what are the questions you are going to write. So 2 o'clock when you can start writing last page. So you can spend around 5 to 10 minutes about that particular question. What are the points? Just note it down. Then at around 2:10 you start writing. Even if you have missed some points actually in between, you can refer that page and write it. Still, if you don't get the point, don't worry, keep going. Working notes are important. Steps are important. Reference to the correct AS number is important. Refer to the Companies Act only if you know. Otherwise, don't bother. Write correct question number, including sub questions. 4A, 4C, 4D, okay. It cannot be 3A, 4C, 5A, not okay. Attempt extra question. Listen carefully. Extra question can be attempted if, and November 19 onwards, they're going to value all those papers also, questions also, and best will be selected. Best will be selected. So don't have a wrong notion that extra question cannot be attempted. So 2 RMRs within 2.5 hours, maybe 2 or 45 minutes, you have finished compulsory 1 plus 4 if you have finished, or the 1 plus 5 you finished. Extra 15 minutes, you try to attempt that extra question available. Extreme case, time nahi hai to be last 5 minutes. Whatever in the question, that's question 4A and 4B, scribble and come, because if you attempt, if it is out of syllabus, full marks will be given. So you must attempt an extra question compulsory. Don't write wrong accounting standard numbers. Relaxing before, oh, exam is easy, exam is tough. Don't bother. You don't get into that and don't have unnecessary tension in life. So with this, let us move on to the subject specific. Accounting standards. So the same discussion what we had in group 1, 5 P's, principle, policy, practices to be followed while preparing and presenting the financial statement. It deals with RMPD, recognition, measurement, presentation, and disclosure standard. For example, AS 18 is a pure disclosure standard, whereas AS 22 is a measurement and disclosure standard. Then responsibility, company is responsible, auditors are responsible, blah, blah, blah. It's basically from the group one. So just to recall the format again, don't forget the format of the company, because amalgamation of companies, you still require the format. Once you go through Sri Rama and Sita necessary for capital, what we discussed. Under the Companies Act, Schedule 3 has 3 divisions: Division 1, Division 2, Division 3. In your syllabus, Division 1 is applicable. It starts with the equity and liability, old scheme and new scheme for both. So starting with the what I call equity, that Sri Rama Sita necessary for capital, one short form I had given, you can refer that. And part 1 is balance sheet, part 2 is statement of P&L. With this, let's move on how to answer yes questions. If it is a pure theory question, so write what is, make a reference to the account standard, write a definition if you know, give an example for that, and very important, very, very crucial, what the accounting treatment to be given for the same. So if assuming they're talking about tax on income, so timing difference, what is timing difference? Define. Then how is it treated in the balance sheet and P&L? Compulsorily, every account, account standard question, connect it to the balance sheet, connect to the P&L. Where does it appear? For example, deferred tax asset is always non-current. Deferred tax liability is always non-current. Mention about that with the disclosure requirement, and you possibly can interconnect with SA and compare that. If it is analytical theory, so first point is same. Supra means the same point. Second point, write a definition only if required. Then analyze the question and other disclosure requirement also to the extent possible you give it. Then if it is a problem, first point is same. One sentence, two sentence, you must write about it. What is this? Then solve the question. Then give your final answer, and disclosure, if possible, you can give it. Fine. So with this, let us move on to the specific standards of the group 2 new scheme I am discussing. Most of them are similar even for the old scheme. One or two may be there in the group 1, just shift it from there, especially old scheme. All the new scheme account standards are covered here. AS4, contingencies and events occurring after balance sheet date. There are 2 points here. Contingency is a condition or situation which may be gain or loss. The occurrence or non-occurrence is depending upon uncertain future event. This is the punch word. What is the provision? Provision is a liability. Where with the substantial degree of estimation, you can measure the same LEM. Then any provision relatable to the liability goes to AS29. Anything other than that comes under AS4. RBD, impairment of debtors, comes under AS4. Provision for repairs comes under AS29. Post balance sheet events occurring between the balance sheet date till the date financial statements are approved by the board of directors or governing body. It can be either absolutely fresh event. For example, 10th April, you have sold goods and that fellow has become insolvent. It is absolutely fresh. As on 31st March, it was not there. You don't have to bother. If it is material, you can disclose in the management report. Whereas there are some conditions existing on 31st March, but made known later. You have to go back and pass an entry on 31st March itself. Proposed dividend is no more an item of AS4 now. You should not account on 31st March. Special point. AS5, ordinary items show separately. Extraordinary items are clearly distinct from ordinary, show separately. Make a reference to P&L, PBET, profit before exceptional, extraordinary items and tax. All of you, even if it is a group 2 account, go through balance sheet and P&L format once more. Then prior period items, the punch words are errors or omission in the earlier period. It has to be adjusted under reserves and surplus. Changes in accounting policy is with retrospective effect. Changes in accounting estimate is a prospective effect. AS5, there are 5 items which are discussed. And PP, anything related to PP now, SLM to WDV, change in like all these are accounting estimate, prospective change only. Now, construction contract. Construction contract is basically where you're doing the construction on behalf of someone else. So it is applicable in the books of contractor. AS7 says only percentage completion method. Under percentage completion method, profit is equal to revenue minus contract cost. What is the POCM? Cost incurred till date, whole divided by total estimate cost into 100. That's what is considered. Only as per para 35 of AS7, you have to make a provision for future operating loss. Nowhere else. AS29 prohibits. Only under AS7 you can do that. Next, AS9, revenue recognition. So it deals with when to recognize, when can I postpone, when there's uncertainty. There are 3 major revenues: sale of goods, when the risk and reward are transferred; rendering of services. There are 2 options, either percentage completion method or complete contract. Whenever there are 2 options in any standard, it has to be a compulsory disclosure requirement, because you need to tell the users of the finance statement which option you opted for. Then use of enterprise resources by others yielding IDR, interest, dividend and royalty, time proportion, declaration and terms of agreement. AS17, segment reporting is like a departmental account. So what are the reportable segment? There are 3 criteria. 10% or more of the total revenue, including external and internal transfer, or the results or assets. And that 10% should cover at least 75% of external revenue. Else, you identify any other segment and include the reportable segment, and management choice, you can include anything you want. Next, if there's a transaction with a related party, so related party, there are 2 points, either control based or significant influence. If it's a control based, disclosure is a must, whether there's a transaction or not, holding and subsidiary. Whereas a significant influence, so like associate company, 24%, etc., disclose only when there is a transaction. AS19, your asset being used by someone else for a consideration. That's called lease. Operating lease, Shamiana business. Shetty sir are owning a Shamiana. So Shravan's marriage. So in that case, you will use the Shamiana for 2 to 3 days. So Shetty sir is a lesser. I can only claim depreciation. Finance lease. So Preeti taking one asset, car on lease from Sundara Motors. Even though Sundara Motors continues to be the legal owner, Preeti will be the beneficial owner. She will claim the depreciation. And under the finance lease, in the books of the lessor, in the books of the seller, whatever the total amount you're going to receive is called gross investment. Its present value will be recognized as a sales. Unearned finance income will be the balance figure. The present value of the gross investment, if you remove from the gross investment, it's called unearned finance income. It is an interest income. It has to be amortized over the lease period. Sale and lease back, where the seller becomes a lessee. So buyer becomes the lessor. Interesting tax planning measure. AS20, earning per share, disclosed at the end of the period, the last portion, basic EPS, diluted EPS. Basic piece, percentage divided by weighted average number of shares. Dilution is the existing EPS gets diluted either because you're issuing options or converting debenture into shares or conversion of preference shares into equity shares. AS22, taxes on income. Accounting income is 100 lakh. Income tax income is 120 lakh. The difference of 20 lakh can be either permanent difference, full stop. If it's a timing difference, you have to create a DTO or DTL, 3-step approach. Provision for tax is always taxable income into income tax rate. Net debit to P&L account is accounting income into income tax rate. Step 1 minus step 2 is a DTA. Step 2 minus step 1 is a DTL. Discontinuing operations. So should be again in the P&L. Every now and then I'm telling you, make a reference to P&L. So P&L starting its continuing operation. Next B, it is discontinuing operation. Disclose, mention about it. 1 mark you'll get it. And the discontinuing can be by SPA. Selling substantial portion, piecemeal or abandonment. There are 2 events to be disclosed: IDE, initial disclosure event, and subsequent events. Intangible assets, IME, identifiable without physical substance. It should be physical substance. It is measurable and economic benefit should be flowing. Normally, it has to be amortized over the life. However, if life is unascertainable, you have to amortize over 10 years. Research expenditure always has to be charged to P&L account. Development expenditure has to be capitalized if traffic conditions are satisfied. Provisions, as I said earlier, para 14. So if OOE conditions are satisfied, that is present obligation, outflow of economic resources, and it can be measured reliably, then you have to make a provision inside the financial statement. If one of the condition is not satisfied, the contingent liability, disclose it. If it is a contingent asset, normally not disclosed because of the prudence concept of AS1. And asset is defined. You please by heart this definition compulsorily. Asset is given in AS26. Resource controlled by the enterprise. Whereas liability is defined in AS29. It is similar definition. Here the word is resource. Here the word is this present obligation. Everything else is same. Resource controlled by the enterprise based on the past event, expecting to have an inflow of future economic benefit, FEB. It is called asset. Whereas liability is the outflow. Everything else is similar. These 2 definitions, somewhere you write, it's going to be useful. Fine. Next, sorry. Partnership accounts. The definition of partnership, I would suggest you to by heart. The relation between blah, blah, blah. Go through it. Partnership accounts, there are 2 kinds of life policies taken up by the firm. Firm pays the policy premium. It is an expenditure of the firm. Individual policy or life policy. Ultimately, when the partner dies, okay, firm will receive. In the case of individual policy, entire policy amount of the deceased plus surrender value. Firm will receive. Joint life policy, entire policy amount will be received. Whenever there is a retirement, the surrender value will be received. Whenever there is a dissolution, so normal dissolution, prepare a realization account, all assets to the debit side, all liabilities to the credit side, then make the realization and dispose of all the liabilities, and final balance transfer to the partner's account. Whereas insolvency of a partner, insolvency of a partner, if there is insolvency of one partner, it should be governed by partnership deed. Only when the partnership deed is silent, then you have to go with Garan versus Murray rule. there are 2 parts. Solvent partners have to bring in cash toward their realization loss, and solvent partners have to share the loss of the insolvency of in the ratio of capital then standing. If it is a fixed capital, go by fixed capital ratio. Fluctuating capital means opening capital plus or minus a general reserve minus P and account debit balance on that date. Don't consider realization loss for that. If there's insolvency of all partners, all the assets you transfer to realization account, all liabilities transferred to total creditors account, and partners loan account has to be transferred to capital account. At the end, the balance in the creditors account and the cash account balance you give to creditors account, the balance should be transferred to deficiency account, because this is the amount which you are not going to give them. That is good. You are going to put the NAMA to them. Piecemeal distribution. So when there's a dissolution, obviously partnership firm assets have to be sold and you have to keep on giving back. So first you have to give to the external creditor. How do you give to the partners? For that, there are 2 methods. It is only with regard to payment to the partners. Maximum possible loss method. After every sale of an asset, the balance assets are found to be useless, worthless. Distribute their loss to the partners. Highest relative capital. Take the capital, find out the ratio, capital divided by ratio. The least capital you take it as a base. Excess capital you keep on distributing. At one stage, capital will be in the profit sharing ratio. Then you distribute all the realization in that ratio itself. Whenever there's an amalgamation of 2 firms, okay, follow the normal amalgamation company principle only. But only thing is you have to open revaluation account. Note it. It is not realization account. Transfer it everything at book value. And finally, whatever is the capital which is then standing there, okay, which may have to be transferred to the new firm. Whereas if the conversion or the sale of a company, open reconstruction account or the realization account, just like AS14, and the consideration, whatever you receive, distribute to the partners. Take extra care there. They might have told you whatever the old ratio the partners have to maintain. So if that is the case, profit sharing ratio, if you have to maintain, you have to give them equal proportion of equity share, whatever the proportion. To maintain the interest on capital, you have to give them preference share, because interest on capital and preference share dividend percentage shall remain same. Next. So revaluation account is opened in the case of entire CPT syllabus, or CA foundation syllabus, admission, retirement and death, and amalgamation of firms. And realization account is in the case of dissolution of firms and conversion of sale. ESOP, employee stock option plan, income tax law you learned, fair market value minus that. Today's market value minus what amount you recover. The differential amount, assuming 160 is the fair market value, you recover 40 from the employees. 120 rupees should be considered as a deferred staff welfare expenditure, employee compensation expenditure, to be amortized over the vesting period. Vesting period, the period for which they must stay in the company. Buyback. So when you take back the security, that's called buyback, only when there is a substantial amount of profit. Buyback can be either out of free reserve, security PM, or fresh issue of any other securities possible. Maximum possible buyback of all securities is 25% of, within the bracket, total paid up capital plus free reserve. Whereas maximum possible buyback of equity share in a year cannot exceed 25% of paid up equity share capital. And very important, after the buyback, the ratio of debt is to paid up capital and free reserve should not be more than 2. Be careful, it is not debt equity ratio. It is debt is to PUC plus free reserve should not be more than 2:1. Fine. Next, amalgamation, absorption, external reconstruction of companies. All the 3 accounting treatment is same because they are all covered in AS14. There are 2 methods of amalgamation. Merger method, if all 5 conditions of para 3 are satisfied, 1 condition is not satisfied, is called purchase method. Method of accounting for merger method is called pooling of interest. Purchase method. In the case of merger method, difference between the PC and the total share capital, equity and preference shall be adjusted against free reserves or capital reserve also you can do it. Whereas under the purchase method, difference between the PC and the net asset shall be called goodwill, that will be amortized normally over a period of 5 years. If it is negative, it will be capital reserve. So para 3, what are the 5 conditions? There's a beautiful balance sheet format I have given you. Sorry. So the first condition is all assets and liabilities should be transferred. All means all, except share capital, equity and preference. And those assets and liabilities taken over should be recorded to book value, assets related. Next, equity share related. At least 90% of the equity shareholders in value should agree for amalgamation. And for them, the next immediately you discharge what? PC by way of equity shares. However, fractional amount can be paid by cash. And 4th condition is transferee company should have an intention to carry the business of transfer company. If these 5 conditions are satisfied, that is called amalgamation in the nature of merger. Purchase consideration is the aggregate of shares, securities, cash, whatever you pay to the transfer company is called purchase consideration as per para 3G. What are the steps to be followed in the case of amalgamation? Amalgamation means A and B closing. Absorption means A limited is absorbing B limited. External reconstruction, A limited gets closed, start new A limited. In all the cases, transfer a company books plus close the existing balance sheet. Assets to be credited, liability should be debited. So that means you have to open a realization account. All assets on the left side, all liabilities on the right side, credit side. Pass a due entry for PC on the credit side and receive the PC. What are the PC? Give to the concerned stakeholders, equity shareholders, preference shareholders, etc. Ultimate balance the realization account transfer to equity shareholders account, and equity shareholders account should match by itself. Intercompany owings and unrealized profit will not come in the transfer books. It comes only in the books of transferee company. There are three methods of computation of PC. Net assets, assets taken over by minus liability taken over at agreed value. Methods of amalgamation go, methods of PC go, sambandham ledu, sambandh nahi hai, sambandha illa, no connection. So don't connect. If they are independent of that. So assets minus liability taken over at agreed value. Payment method is all the payment you made. Share exchange method, number of shares of transferor company into value per share of transferor company. Mango with mango comparison. Demerger, not in the syllabus. One of the units gets separated. That's called demerger. In the case of amalgamation, transferee company, what is the entry? First, business purchase to liquidator of transfer company. Then concerned asset account, what you have taken over. To concerned liability, to business purchase, what is debited, you have to cancel. And liquidator of transfer company to share capital by bank. Internal reconstruction was the easiest topic, which is repeatedly asked in several recent exams. Fixed asset written off should be compulsorily shown for next 5 years. And the word and reduced, don't use the symbol here, must be suffixed to the name if and only if the court's order. Nothing you given the question, you always do that. There are two approaches. Capital redemption, sorry, it should be read as what? Capital reduction account approach, where all the profits or losses what they given, share capital foregoing, debenture foregoing, assets value going up, everything transferred to an account called capital reduction account. At the end, compulsorily write off P&L account debit balance, visa expenditure, goodwill, other assets as and given, and final balance has to be transferred to capital reserve. And share surrender is another approach. It is Caesar approach. Anything related to shares should be opened to share surrender account. All the transactions through capital reduction account. And finally, the same approach what we followed here has to be followed. Very important point. No entry for conversion of shares. Preference shares are converted to equity share. Entry nahi pass karna hai because it's just a printing of a certificate. Entry only when they are issued. Liquidation of companies. So it can be compulsory or voluntary wind up based on the bankruptcy code which you study in CFL corporate law. There are two statements. Statement of affairs prepared by the company to be submitted to the liquidator. It has got 8 lists. List A and B about assets. CDE is about liabilities. E and F is about, F and G is about shareholder. And list H is explanation. That is called deficiency of surplus account. Next, after liquidator takes over the charge, he has to prepare a statement that's called liquidator final statement of account. It is nothing but receipts and payment. Debit side a receipt, credit side a payment, and they should be in this order only. You need to by heart this order. What is this preferential creditors and overriding? So anything payable to workmen, wages, etc., they are called overriding because workmen are poor employee. First you pay them, then you pay. So after the same amount, if it's payable to employees, that is white collar job, that is called what is called preferential creditors. First overriding, then preferential creditor. In addition to that, under this we also have another 3 items. Totally here 4 items, here 7 items. So here there is no monetary ceiling on the left side, right side there is a monetary ceiling. Please look into it. Banking company, the business is accepting for the purpose of lending. Revenue recognition of banking companies, performing assets should be recognized on accrual basis. NPA should be recognized on cash basis. And that too, whatever is the interest which was accrued earlier in the previous quarter has to be reversed. So based on NPA classification, assets can be substandard asset. That means it's a performing asset, substandard, doubtful loss asset classification. Provision to be made, standard asset is small one, 0.5%. Substandard, if it's secured 15%, unsecured 25%. Doubtful, unsecured means 100%. If it's secured, start from 25. So 25%. If it's up to 1 year. If it is 1 to 3 years, 25 plus 15, 40%. If it is more than 3 years, 100%. Loss assets, it is 100% provision. Wherever there's a DICGC or ECGC guarantee, so total advance 2 RMRs. So secured, unsecured 2 RMR. How much is the guaranteed portion? On that there should not be any provision. Make a provision for secured, and unguaranteed and unsecured you need to make a provision. And classification of investments is HTM, held to maturity, held to trade, available for sale. This is the classification of bank company. NBFC, they are the financial companies but they cannot do the banking activity. So the functions of NBFC cannot accept the demand deposit. NBFC do not take part in the payment, etc. Just glance to the theory aspect. The last aspect, consolidated financial statements, new scheme. So holding company and subsidiary company definition, 287 and 246. Okay, so 246 is holding company, 287 is a subsidiary company. Definition you go through from corporate law. When you aggregate the financials, that is called consolidated finance statement. Step 1 is about determination of shareholding pattern, consider equity share capital only. Step 2 is about analysis of the profits. The reserves and surplus of the subsidiary company has to be analyzed. So it can be pre-acquisition or post-acquisition. So go through this format. Whatever the amount divided into 2 RMRs, holding company share, minority interest, holding company share, minority interest, pre and post-acquisition. Then step 2A, bonus shares, what you reduced under left side, separate you right here C1, C2, and if there's a revaluation profit, D1, D2. Computation of minority interest is very simple. In the previous steps, all the 2 series, share capital, X2, A2, B2, C2, D2, everything you just add, that's called minority interest, shown on the liability side. Whereas cost of control is investment appearing on the asset side of the holding company balance sheet, less if there is a dividend out of pre-acquisition property minus, then all 1 series, X1, A1, C1, D1, B1 minus nahi karna hai. B1 has to be directly taken to concerned balance sheet. So I repeat this, all 2 series in the previous step has to be added and called minority interest. All 1 series have to be deducted from the investment except B1, that will give you either goodwill or capital reserve. Intercompany owings, debtors and creditors, BR, BP, etc. has to be removed. Debtors and asset side you reduce the debtors, liability side reduce the creditors. Same with BR, BP. Unrealized profit is when holding company had sold to subsidiary company, or subsidiary company has sold to holding company, and the stock is still lying there, and if they added the profit, then 2 RMRs. Holding company selling to subsidiary company, that's called a downstream approach. So then you don't have to do anything, reduce from the stock, reduce from the P&L. Upstream approach, where subsidiary company is sold to the holding company, then from the asset side, you remove only from the stock. Liability side, holding company share reduce from the holding company P&L, minority interest you reduce from the minority interest. And in step 1, consider equity share capital mainly, convertible may not be required. Step 3, equity share capital as well as preference share capital. Step 4, you consider everything. What is consolidated P&L account? Aggregating the P&L account line by line. If there is intercompany transaction, exclude karo. Pre-acquisition profit has to be transferred to capital reserve and eliminate any unrealized profit on stock by transferring it to the capital reserve. So with this, let us just conclude. Strength is a product of struggle. You must do what others don't to achieve what others won't. So keep on putting your efforts. 100% success will be yours. And happiness is not by chance, but by choice. I know some of you still may be having that apprehension. There are a lot of disturbance at home, lot of disturbance because of corona, health, etc. is affected because of the weather changes. Don't bother. So happiness is not by chance, it is by choice. You decided to be happy, be happy. As simple as that. That's it. So 2-3 extra points I want to tell you. Go to the exam hall by 1:15. So do little breathing exercise. So again, very simple. Don't do fast. Okay, relax. Hold, release. 5 to 10 times only do. Don't do too much of yoga there. Okay. Before 12 o'clock, if you are done at home, fine. Then before maybe 5 minutes or 10 minutes before you enter that, so you can do, if the body has heated up, you can do Sadanta Pranayama. Inhale through the teeth. Exhale through the nose. Do that. It will reduce your heat. But 5 to 10 times only. And then go inside the exam hall, at least by 1:35, 1:40. Relax. So just concentrate on breathing. Don't do anything. And 1:45, start writing and complete the examination in one shot. Okay. So any emergency issues, if you have this number, the second number, office number, I'm having that office number with me till the date of your examination. Emergency issue only you call. Don't call me, sir, this question I don't know the answer. That's not going to be answered anyhow. So anything else. And also today's PDF also will be sharing, maybe around 10 o'clock I'll share. So to all of you. So use it just to go through it and just to go and enjoy the exam. And trust me, advanced accounting will be easier than the accounting paper. Accounting itself would have been easier. I'm not going to comment to easier or whatever. It's going to be easy. Go and just enjoy the examination. Okay. So you are, as you said, right, your job is to go and put your effort. Put best of the best effort. Aim at 100. At extra questions you attempt. Even if you end up getting a 99, I'm happy, man. Okay. So just to conclude with a small joke. Okay. What's karma? Today, because of the online, the parents who miss the class during their days have to sit and now listen to their children's class during online classes. That is what is called karma. So parents would have missed the classes in their what you called young days. Today, because of the online classes, so they have to sit and listen to their children's class. That's what is called karma. Okay, so you people don't miss that to prepare, so that your children won't have to prepare extra for the CA examination. So I hope it was useful. Please understand these sessions are only for the examination related. It is the revision ka revision. Okay, we have done exhaustive classes, then we did revision classes for hours together. Today it is just a brief what we gave. Okay, if you know the subject, you would understood. If you don't know the subject, still 2 days you have time. I think your exam is on Tuesday.
Yes, sir.
Tuesday. So if there are two possibilities. Today, if you want, you can take one more subject. Like you have got Infotech, you have got FM. If you want to prepare, maybe today and tomorrow half day, if you want to spend on those subjects, you can do that. And maybe tomorrow afternoon onwards, you can prepare for accounts. Illa sir, I want to prepare for accounts only. That's also fine. That's left to your decision. But my suggestion would have been today, okay, maybe today you can spend accounts only. Spend some time on account. Tomorrow half day, you can spend on another subject. Maybe whichever you think which is more standard, and maybe tomorrow afternoon you can start preparing for accounts. So you plan. I don't want to change your structure. You plan and go and enjoy the examination. So all the best. Keep rocking. Keep enjoying. Okay. So I'll be back again on the last day. Okay, to discuss with you. Okay. I hope all of you enjoyed.
Yes, sir.
Yes, sir.
Useful. I thought all sessions are useful.
Yes,
sir.
Okay. Right. So any specific question to be asked? Nothing. Okay. Enjoy. All the best. I'll be concluding the meeting. God bless you all. Thank you.
Sir.
Thank you. Enjoy. Bye bye. Bye everyone. All the best to all of you. God bless you. Thank you. Bye.